No tax on overtime is a lie. Not the law. The law is real. The lie is what they told you about it. They said your overtime's tax-free now, and kind of. But here's what nobody actually explained. There's one word buried in this bill that changes the entire calculation. One word. And right now, roughly 80% of the people in this country who earn overtime are filing based on a number they guessed. Not calculated, guessed. Some are claiming way too much. Some are leaving money sitting on the table that they've already earned. And the wild part? It's not complicated. It never was. It just wasn't explained right. But once you learn the actual formula, once you run it, stack it against your standard deduction, the federal tax on those extra hours you work drops to effectively zero. That's not a strategy. That's not some clever workaround. That's just math applied correctly to your own paycheck. It's called the 0.333 rule. By the end of this video, you'll know exactly what it is, why most people miss it, and how to make sure you're not one of them. Let me tell you about someone. We'll call him Carlos. He's 35, does construction, been pulling consistent overtime for about 3 years, 10 extra hours a week, give or take, makes $24 an hour regular, bumps to $36 when overtime kicks in. He sees the headline, no tax on overtime, opens his phone, adds up his OT earnings for the year, $14,400. And here's what he does next. Calls his accountant and says, I've got $14,400 in tax-free income this year. The accountant should have stopped him right there. Is that your total overtime check, or just the premium? That's the question, and if nobody asks it, everything that follows is wrong. See, the deduction doesn't cover the whole overtime paycheck. It covers only the premium portion, the extra amount above your regular rate. That's it. And that word, premium, never once appeared in the headline. Most people heard 4 words and filled in the rest themselves. That's like reading the name of a dish and assuming you know every ingredient. The number Carlos gave his accountant? Off by about 2/3. And he's not alone, not even close. But here's what no one's actually drawn out. The step-by-step math of how the premium works, using real paycheck numbers, because it's not hard, and the 0.333 rule is what makes it impossible to get wrong. So here's all you need to know. Your total overtime earnings for the year times 0.333, that's your deduction. That's the whole thing, that's it. And here's why that formula works every single time. When you earn time and a half, your overtime paycheck is always 2/3 regular pay and 1/3 premium. Always. Doesn't matter what you make per hour. Doesn't matter what industry you're in. That ratio never changes. So for Carlos, $24 regular, $36 overtime. The premium's that extra $12 per hour. That's what the law protects. The base $24 is still taxed exactly like it always was. $14,400 times 0.333 is $4,795. That's his deduction. Not $14,400, $4,795. And here's how it scales. 10 grand in annual overtime pay, deduction of $3,330. 20 grand, $6,660. 37,500. You've hit $12,500. That's the cap, the maximum. You're done building. Not the same number as your OT paycheck. Never the same number. But it's real money, every time. 3 different overtime amounts, 3 different deductions, one formula that works for all of them. The math doesn't reward the biggest claim. It rewards the correct one. Now, the cap. Because a lot of people either don't know it exists or have no idea where it sits. $12,500 a year if you file single, $25,000 jointly if both of you earn qualifying overtime. And here's where the ceiling actually kicks in. Once your total overtime pay for the year crosses $37,500, you've maxed out. Every dollar above that is fully taxable again. For most people pulling 10 or 12 hours of overtime a week, you're probably generating $15,000 to $25,000 in annual OT. You're under the cap, still building. But if you're a nurse running back-to-back doubles, or a plant worker in a mandatory overtime cycle, you need to know that number, because the IRS already has a general sense of what your W-2 should look like based on your classification. An overclaimed deduction on a brand new provision is exactly the kind of thing that gets flagged. The deduction doesn't reward the largest number on the form, it rewards the accurate one. And here's the part that should genuinely annoy you. The confusion isn't some accident. Congress called it no tax on overtime. And look, that's technically defensible in a narrow reading. But as an explanation to the 23 million households actually earning overtime, it's a disaster. Because when most people hear no tax on overtime, they hear no tax on my overtime paycheck. And those are completely different things. Think about what that headline actually did. You saw it on the news. HR sent out a bulletin. Your union rep mentioned it. And every single version of the story led with the same 4 words: no tax on overtime. Nobody followed up with specifically the 1/3 premium portion subject to a $12,500 cap, only on FLSA mandated hours, phasing out above $150,000 in MAGI. That's accurate. Nobody puts that on a chyron. So the misunderstanding spreads, and when April comes around, the wrong number ends up on the wrong line, either too high or just missing entirely. The enemy here isn't the tax code. It's not your accountant. It's 4 words that gave people the right idea and the wrong math. And specifically, the moment someone files based on what they heard instead of what they calculated. It's like getting handed a 33% off coupon and telling the cashier your meal is free. That's what putting the full OT paycheck on the return looks like. So where does it actually go wrong? 3 specific traps, each one sitting right there in the law, waiting for anyone who stopped reading after the headline. Trap 1. The headline trap. Sometime after the bill passed, someone at your job mentioned the deduction. Maybe payroll sent something. Maybe a coworker forwarded a link. And the version that spread said the whole check counts. That becomes the mental anchor, and it follows people all the way to April. By the time it gets corrected, you're looking at amended returns, possible penalties, and a conversation with your accountant. Trap 2. The FLSA trap. This one disqualifies more people than the cap does, and most of them have no idea. Section 70202 only covers overtime that your employer is legally required by federal law to pay at a premium rate. That's FLSA mandated overtime. Hours above 40 in a standard work week. But voluntary overtime your employer offers without a legal obligation? Doesn't count. Contractual overtime bonuses built into your compensation? Doesn't count. And if you're a salaried worker who's classified as exempt under the FLSA? Also doesn't count. Here's the one-question test. If your employer didn't pay overtime for those hours, would they be breaking federal law? If yes, you're good. If they're paying it because of a contract or company policy, that's something to sort out with your accountant before you claim anything. Claiming the wrong kind of overtime isn't aggressive tax planning. It's an incorrect return. Trap 3. The phase-out trap. Quieter than the other 2, but it's there. Once your modified adjusted gross income, your MAGI, crosses $150,000 filing single or $300,000 jointly, the deduction starts shrinking, dollar for dollar. Not gradually, just gone. For most overtime workers, this doesn't apply. People in construction, healthcare, logistics, manufacturing, they're generally well under those thresholds on overtime income alone. But in households with rental income, investment gains, or side income stacking on top of wages, the MAGI can creep up faster than you'd expect. Know your number. Don't assume the full deduction is yours before you check. So, back to Carlos. He almost handed his accountant a number that was off by $9,600, but instead, he learns the formula, confirms with HR that his overtime is FLSA mandated, checks his household income against the $150,000 threshold, well under it. And then he does the math. $14,400 times 0.333 equals $4,795. That's the number. Here's what his return actually looks like. Total gross income, $62,000. Files single. Standard deduction, $15,000. Overtime deduction, $4,795. Combined, $19,795 off the top. Taxable income, $42,205. And on every dollar he earned in overtime, the hours before sunrise, the missed weekends, yeah, I'll cover that shift, the federal tax liability drops to effectively zero. Not because the law made his whole check tax-free, because he ran one formula and stacked it correctly. He didn't find a loophole, didn't hire anyone, just refused to guess at something he could actually calculate. Now, his coworker. Same job, same rate, same hours. But he heard no tax on overtime and put the full $14,400 on the return. No formula, no FLSA check, just the number off his pay stub. He overclaimed by $9,605. The IRS doesn't need to specifically investigate him. The W-2 match runs automatically. A letter shows up, and suddenly a deduction that was supposed to help is now a problem. The math doesn't protect you when it's wrong, only when it's right. 4 things. That's all this takes. First, separate your overtime on every pay stub. Your employer is required to show regular pay and overtime pay as 2 different line items. If yours doesn't, call payroll. You can't run 0.333 without that number isolated. Second, run the formula quarterly, not in April. Every 3 months, multiply your cumulative overtime pay by 0.333, write down the running total. If you're getting close to $12,500, you've maxed out. If you're well under, keep going. Third, confirm your overtime is FLSA mandated. Just ask HR directly. Is my overtime legally required under the Fair Labor Standards Act? Get it in writing. Even an email chain is fine. If your return ever gets questioned, that's your documentation. And someone at work told me it qualified is not documentation. Fourth, don't hand your accountant a pay stub and hope they figure it out. Walk in with the math done. Regular pay total, overtime pay total, the 0.333 calculation. Tell them, I've got qualifying overtime under Section 70202. Here are the numbers, because if they miss it, there's no refund for a deduction nobody claimed. And look, everything here comes straight from the statute. This isn't strategy. It's not interpretation. Section 70202 is in the bill. The FLSA has governed overtime since 1938. The $12,500 single cap is in the bill. The $25,000 joint cap is in the bill. The $150,000 and $300,000 phase-out thresholds, also in the bill. The 0.333 formula isn't something someone invented. It's the arithmetic of time and a half. 2/3 regular pay, 1/3 premium. Same math that's been true since the FLSA passed. It works because the underlying structure of overtime pay never changes. About 23 million households in this country earn regular overtime. Most of them are hourly workers in healthcare, construction, logistics, public safety. These aren't people looking for a clever angle. They're people who stayed late and were handed a real deduction, if they do the calculation right. That's all the rule asks, 1/3, every time. This deduction doesn't feel complicated because the law is confusing. It feels complicated because the headline was incomplete. You heard no tax on overtime. The law says no tax on the premium. You looked at the full OT number. The formula needs 1/3 of it. You assumed all your hours qualified. The FLSA says which ones actually do. The 0.333 rule gives you what nobody else handed you when this law passed. The actual math. The premium isn't a vague concept. It's calculable. The cap isn't fuzzy. It's $12,500. The phase-out isn't hidden. It starts at $150,000. The deduction isn't complicated. It's math. One formula works the same way every single time, for every hourly rate, every pay period, every industry. The only variable, the only one, is whether you calculate it. Carlos, the guy from the beginning, he only needs to do one thing: run the formula. The money's already in his paycheck. He just has to do the math before someone else does it wrong for him. Don't claim the full check. The premium is waiting. If you found value in this video, please like and subscribe. I'm not a tax professional or financial advisor. This is for educational purposes only. Tax law depends on your specific situation. Always work with a qualified CPA or tax attorney before making any decisions based on what you've seen here.